Tabby is one of the region's most highly valued fintech startups. The buy now pay later platform recently valued at $3.3 billion USD after closing a $160 million Series E funding round. I joined Tabby CEO Hosam Arab on stage at the Capital Markets Summit in Dubai. He told me Tabby's IPO could be as soon as 12 months away.
In terms of the window, we're probably slightly earlier. So there is some time to consider what happens in the markets around us. And what we do between now and then is continue to build and set ourselves up for being ready for a public listing. And so there is quite a lot to do internally and putting ourselves in the right shape and form for a public listing. We're also unlikely to be able to time the markets perfectly. And so we're aware of that. We're cognizant of that. We have seen in our space we're a buy now pay later player for anyone that doesn't know. We have seen a casualty in the US. So Klarna did decide to pull back on their IPO in the short term while the market gains a bit more clarity. So we're a bit fortunate to have a bit more time to figure things out, and until then we continue to build. The one thing to obviously remain aware of is, as while our market has been somewhat resilient in the short term today, we're not immune to changes in oil prices, and that's where we're a bit more concerned around just a broader recession having an impact on consumer spend and credit performance for consumers in the markets that we operate in. So that's kind of the one thing that we want to track and watch as oil prices fluctuate. But beyond that, we continue to build and make sure that we're ready.
Tabby has become one of the region's most closely watched IPO stories. You've raised from the biggest names in global capital. What's the holdup?
There's no rush. We did a private round fairly recently just to ensure, and to be honest, I think looking in hindsight, it was definitely the right call. The idea behind it when we did it was, let's take some private capital, given that it's available, in case there is a slowdown in the public markets, or in case there is a change in appetite and what is happening in the public markets. Obviously, at that point in time, things were looking very bright, so there were no concerns. But you never knew. So we wanted to make sure that we had at least some buffer, some comfort as we built towards the public listing to ensure that that if things did change, we were in a pretty good spot. And so that has at least bought us some time. And now we let it play out. We're continuing to build internally on governance, on reporting. Decision making is very, very different moving from private to public. And so we want to make sure that we're in the right spot to be able to tell this story to the public markets and public investors. In terms of timelines, I think we are looking at some point in the next 12 to 18 months. That remains the case. If the markets turn around earlier, then maybe it is closer to the shorter end of that time frame.
So am I correct in thinking this is more about market timing than internal readiness at this point?
It needs to be both. I think if the market was ready today, we would not be listing today. We're still building out the readiness. We want to make sure that we're in the right spot. I don't think we're very far from that, but we need to get it right internally before we get it right externally. I think we're as I mentioned earlier, we're never going to be able to time this perfectly. The environment needs to be accommodating, but it can't be perfect.